Welcome back to another one of my transparent M1 Finance portfolio recap. This week we're covering the 6 trading days from July 10th through July 17th. We're using 6 trading days for the market gains because that's what M1 displays for the weekly view, and we're going with that. As always, this is not financial advice, just sharing my own portfolio journey and observations. So let's get into it. The broader market delivered a constructive but increasingly choppy week. Early in the period, the S&P 500 and Nasdaq posted solid gains, supported by continued AI enthusiasm and positive momentum in technology and growth names. The S&P 500 closed around the 7,575 level midweek, reflecting decent breadth and participation. As the week progressed, we saw signs of rotation and profit-taking, particularly in semiconductors and some high-valuation AI names. This is a classic late-cycle dynamic where investors begin questioning the pace of spending versus near-term returns. Options expiration added intraday noise, which is typical for that part of the month. On the macro front, the market continues to digest mixed economic signals while looking ahead to earnings season. The labor market remains relatively resilient, but there's growing focus on corporate guidance around AI capex and margins. Sector rotation was evident. Some defensive and value areas held up better as growth names paused. Overall, it was a week that reminded us of the importance of both conviction in long-term themes like AI and the need for risk management amid elevated valuations. Moving to my main portfolio, it started the period at $244,315 and closed at $246,403, delivering a plus $2,088 market gain and a plus 0.90% money-weighted return over the 6 trading days. Here's how the major holdings and pies performed, ranked roughly from strongest to weakest. PLTR, strong plus 4.41%, plus $2,874. Continued conviction in the AI data platform story. AAPL, plus 5.84%, plus $288. MSFT, plus 2.26%, plus $102. Dividend and ETF 1 pie, plus 0.90%, plus $660. VOO, minus 1.54%. ETF and dividend pie, minus 1.08%, minus $750. NVDA, minus 3.86%, minus $686. QQQ, minus 4.16%, minus $239. The portfolio benefited from strength in select names while navigating the broader tech rotation. On the dividend side, the dashboard showed only $105, but we're ignoring that figure and going straight to the activity tab for the real numbers. Here are the individual dividends I received this week, listed in order. Starting on July 14th, PBDC, Putnam BDC, paid $22.01. On July 15th, we had several. O Realty Income contributed $13.70. USBUS Bancorp added $7.37. There was $9.59 from STRC. Main Street Capital paid a combined $44.61 across entries. OBDC Blue Owl Capital delivered $35.04 total. EPR Properties paid $7.28. TDAQ added $27.94. And IGD Voya brought in $21.74. July 16th saw YMAG YieldMax pay a combined $19.92. And on July 17th, QDTE Roundhill contributed $17.90, while QQQY Defiance added $10.37 total. Adding it all up, the accurate total dividends for the 6 trading days came to $234.57. When I combine that with the $2,088 market gain, the true total gain for the week is approximately $2,322.57. I just recently discovered M1's new Dividend Tracker tab, and here's what it showed. For 2026 year to date, total income $15,552. Dividends earned $9,125. Average monthly income $1,296. Running the numbers forward, annualized, roughly $15,552 plus and climbing. Per month, $1,296. Per week, approximately $300. Per day, around $43. Per hour, roughly $1.80. The power of compounding in action. This core passive income component is becoming an increasingly important part of the overall strategy. This week showed the usual market push-pull. Real excitement around innovation running into short-term worries about valuations and rotation. Money shifted between different groups of stocks, which is pretty normal when things get extended. Looking ahead, I'll be paying close attention to earnings reports to see if companies are still confident in their long-term growth plans, especially around AI. For now, the plan stays the same. Stay disciplined with high conviction positions, keep the dividend engine running, and manage risk thoughtfully.